Good evening, everyone. Sania, Bin, Aman, Alexander, Ayan. Please confirm if I'm audible to all of you or not.
Good evening, sir.
Good evening, sir. Yes, you're audible.
Good evening, sir.
Okay. All right. So, everyone, in the last class, we started this topic, dissolution of form. And while covering this topic, we understood the meaning of the dissolution. Apart from the meaning of the dissolution, we also understood what are the different types of account that we need to prepare in order to do the accounting of the dissolution of the partnership firm. So let's just quickly recall everything, and then we'll move to the next question. We did one question in the last class as well, but we'll do a few more questions based on the dissolution today. So starting with, first of all, let's just revise everything. In the last class, we talked about the meaning of dissolution, wherein I've told you that dissolution has been defined under the Indian Partnership Act 1932, which says that dissolution of a firm basically means termination of the partnership among all the partners. Or you can also say that dissolution is nothing but the closing down the operations of the business, closing down the operations of the firm. So in order to terminate or dissolve a firm, we need the mutual consent of all the partners. So if all the partners are mutually agreed that we should close down the business, we should close down the operations of the business, then it is considered as the dissolution of the partnership. Then I've told you that in case of dissolution, we need to basically dispose of all kind of asset and pay off the liabilities, including the outsiders liability and liability towards the partner. We also understood that from the accounting point of view, we need to prepare three types of account while doing the accounting for the dissolution of the partnership, which include realization account, partners capital account, to cash or bank account, which means that whenever question will be asked from this particular topic, question may require you to prepare the realization account or the partners capital account, cash or bank account. The question may also require you to prepare all the accounts at the same time. It may require you to prepare the realization account only. So depending upon the question, we need to prepare different types of account. So generally speaking, we need to prepare these three kind of account under the dissolution of the partnership. And we started the first discussion upon the first kind of account, which is realization account, wherein I've told you that in order to prepare the realization account, we need to consider a few points. There are 3-4 points that we discussed in the last class, like in order to prepare the realization account, we must first of all transfer all kind of asset to the debit side of the realization account. And but keeping that in mind, that while transferring all the asset to the debit side of the realization account, we must not transfer cash account, bank account, profit and loss, advertisement expense, and miscellaneous expenses. These items are not transferred to the realization account, debit side. Whereas after transferring the asset, second thing that we need to do, we need to transfer all kind of liability from the balance sheet to the realization account. On which side? On the credit side of the realization account. But make sure that while transferring all the liability, you must not transfer these kind of items. Even though these items are recorded on the liability side of the balance sheet, even though these are from the liability side of the balance sheet, but still these items won't be transferred to the realization account. Partners capital account, partners loan account, PNL, all of these are transferred to the are not transferred to the realization account. However, these items will be transferred somewhere else. If you talk about the partners loan account, this will be transferred to the cash or bank account, credit side. If we talk about the partners capital account, it will be transferred to the partners capital account. PNL balance will also be transferred to the partners capital account. Reserve will be transferred to the partners capital account. Work and compensation reserve will also be transferred to the partners capital account. And apart from this, we also discussed that realization expense may also be there, and such realization expense will be recorded on the debit side of the realization account. Realization expense will also be also known as dissolution or winding up expense. So guys, we discussed all these points relating to realization, and we also covered the format of the realization account, right? We see this is the format of the realization account. Just a minute, let me zoom in. All right, so this is the format of the realization account, wherein first of all we will transfer all the assets from the balance sheet, debtor, stock, furniture, machinery. And after doing this, we will transfer the liabilities. This was the format. Yeah. First of all, we will transfer the asset by the name of sundry debtors. Then we will transfer the sundry creditors, and we will, if any asset is being realized, then such asset will be recorded on the credit side. If any liability is being paid off, such liability will be recorded on the debit side. If any asset is being taken over by the partner, such asset will be recorded on the credit side again. And if any liability is being paid by the partner itself, then such liability will be shown on the debit side and debited to the partner's capital account. And after doing all of these transactions, after posting these transactions in the realization account, we tend to find out the loss or profit after doing every transaction, after recording every item in the realization account. And whatever the profit or loss that we arrive at, such profit or loss will be distributed among the partners in the profit sharing ratio. And after discussing the format, we have we also did one question based on the same concept. That was this question we discussed in the last class, question number 1. So I hope everything that was discussed in the last session is clear to all of you. And if it is clear, we will move to the next question. We will start with question number, not question number 2. We will first do question number 3, then we will come back to the question number 2. So if everything is clear till this point, guys, please confirm. If anybody have any kind of doubt, please tell me so that I can cover that. I can resolve your doubt first, and then we'll move to the next question. Alexander, Evan, Ayan, Tanya. Anyone have any kind of doubt?
Sir, I was absent in the last class. How do I note this down? Should I note it down?
You should ask for the recorded lecture link. You just get connected with your counselor. They will be sharing a class link, recorded video. They will provide you with a class link of the recorded video, and you can cover the entire lecture through that link.
Okay, sir, will do.
Okay. All right, everyone. Anyone else want to ask anything, or shall we start with the question directly? Evan, do you have any doubts, Anya? Nobody have any doubt. Okay. All right. So let's start with question number 3 first, and then we will do question number 2 as well. Okay, just a minute. All right, everyone. So question number 3. Let's just read this question first of all. It says that Ashish and Kanav were partners in a firm. Profit and loss in the ratio, sharing profit and losses in the ratio 3:2. The balance sheet is given for the year ended 31st of March 2018. On the asset side, you can clearly see we have assets. We have bank. This is bank balance. Stock, debtor, furniture, plant, investment, and then we have a debit balance of the profit and loss. So this is basically P&L on the asset side indicate loss. Just lost 10,000. Then we have trade creditors, trade credit employee, sorry, trade creditor, and this is employees provident fund. This belong from. This should not be here. This will be employees provident fund. Mrs. Ashi's loan, Kanav's loan, workman compensation, investment fluctuation reserve, capital. Apart from the balance sheet, we have few adjustment given as well in the question. First adjustment is regarding Ashish. It says that Ashish agreed to take over furniture at 38,000 and pay off Mrs. Ashi's loan. Okay. Then debtor realized 18,500, plant realized 10% more. Connect took over 40% of the stock at 20% less than the book value. Remaining stock was sold at a gain of 10%. Okay. Then trade creditor took over the investment or investment in full settlement. Then Kanak agreed to take over the responsibility of completing dissolution at an agreed remuneration of 12,000 and to bear realization expense. Actual expense of realization amount to 8,000. Prepare realization account. So this question is asking us to prepare the realization account. So let's just start with the format first of all, and then we will discuss each and every point one by one. So everybody, first of all, prepare the format of the realization account. All right, everyone. So this is the format of the realization account: particulars, amount, particulars, and amount. This is the credit side. This is the debit side. All right. So the first thing that we need to do in order to solve this question, first of all, we will transfer all the assets on which side? Tell me. On the debit side of the realization account. Just a minute. Okay. So I'll write down two sundry assets. Sundry assets. Sundry asset, and we'll start recording all the assets on the debit side of the realization account. But tell me whether I should record the bank account, bank balance in the asset account in the realization account as well or not?
No, sir.
Whether I should write down the bank in the realization account, yes or no?
No.
No. But can we write stock, debtor, furniture, plant, investment? All these will be recorded here, yes or no? But
Yes.
again, we won't be recording the P&L, right? Everyone, is it clear to all of you?
Yes. Sir.
Yes, sir.
Sir, bank
So
and
let's-
profit and loss will not be.
Yeah, bank and profit and loss won't be recorded. Anyway, so let's first of all write down all the value of the asset. Stock. The value of stock was 24,000.
Very good.
Then we have debtors, 19,000. After this, furnitures, 40,000. Then plant, 2,10,000. Then investment is also there. Investment is at 32,000. Done. We have recorded all the assets that should be recorded in the realization account on the debit side. Now we will transfer all the liabilities. So to sundry liabilities. We'll start recording all the liabilities one by one. So the first thing is trade creditor. Right. So trade creditor is how much? 42,000. Trade creditors. Not buy. Sorry. Trade creditors. $42,000. Then EPF is also there. Employees Provident Fund, as you can see. Employees Provident Fund is 60,000. Right. So we'll write down Employees Provident Fund. I'm writing it in the short form, EPF 60,000. Then we have Mrs. Ashi's loan. Now tell me whether Mrs. Ashi's loan will be reflected in the realization account or not. Whether I should write down the Mrs. Ashi's loan or not. Tell me.
A loan account should be made and then.
Okay, so you are saying that we should first prepare the loan account and we should transfer Mrs. Ashi's loan to the loan account. No. The first of all, loan account must be transferred to the partner's capital account. But remember, only partner's loan account need to be transferred to the partner's capital account. That is what we covered in the previous class. Here we go. Here it says that partner's loan account need to be transferred to cash. Sorry, partner's loan account need to be transferred to the cash or bank account. Right? It should be transferred to the cash or bank account. But now tell me, is it partner's loan? The loan here on the liability side this time, is it partner's loan? Answer is no. It is not partner loan. This is partner's wife's loan. This is Ashi's loan. We have borrowed the amount from Mrs. Ashi's. We haven't borrowed the amount from Ashish himself. All right. So Mrs. Ashi's loan is a outsider's liability. It is not partner's liability. It is not the liability towards the partner. So we won't be transferring it to the cash account. Instead, this will be transferred to the realization account on the debit side, just like any other liability. It will be treated as external liability, outsider liability, and we will write it in the realization account debit side, just like any other liability. Mrs. Ashi's loan. What was the amount? Amount was just 9,000. All right, everyone. After that, we have Kanav's loan. We have Kanav's loan. Now tell me whether Kanav's loan will be transferred to realization account, yes or no? Whether we should transfer Kanav's loan to the partners, sorry, to the realization account, yes or no? Kanav is one of the partner. Whether his loan should also be transferred to the realization account, yes or no?
Yes.
Should be transferred. Anyone else? Please confirm. Alexander, what do you think? It should be transferred to the realization account or not?
Sir,
The
Yes, Evan.
sir.
Sorry?
See you, sir.
I'm just asking whether we should transfer Kanav's loan to the realization account, just like any other liability being transferred. Whether we should transfer the Kanav's loan in the realization account as well, yes or no? Sania, what do you think?
Sir, we cannot transfer
We cannot transfer partner's loan to the realization account. Instead, I just told you just now that partner's
transfer
loan
cash
needs to be
account.
transferred to the cash account. See, here it is written, partner's loan will be transferred to which account? Cash account or bank account? All right. It cannot be transferred to the realization account. If partner's loan is on the liability side, if we cannot transfer such loan to the realization account, instead it will be transferred to the cash or bank account, depending upon which account we are preparing. So this won't be transferred to the realization account. Got it, everyone? Is it clear?
Yes, sir.
Yes, sir.
Okay, now tell me, what about workman compensation reserve or workman compensation fund? Workman compensation fund and workman compensation reserve is the same thing. Tell me whether what should I do with the workman compensation fund?
It will be distributed among the partners.
No, this won't be just distributed among. We are not doing retirement right now. I'm just asking whether what should I do? Obviously, this will be transferred to the partner. That is a different thing. And right now, I just wanted to know whether this item need to be transferred to the realization account. Yes or no?
No, sir.
Answer is no. Workman compensation reserve or workman compensation fund cannot be transferred to the realization account. Rather, it will be transferred to the partner's capital account. Just like she said, that it will be distributed among the partners. Yeah, she's right. But the thing is that right now, I'm just asking whether we should take it and transfer it to the realization account. Answer is no. It won't be transferred to the realization account. Like we did this point in the previous class as well, wherein I just wrote this point. Partner's capital account or P&L reserve or workman compensation reserve will be transferred to credit side of the partner's capital account. Got it? Everybody, is it clear to all of you?
Yes.
Yes, sir.
Okay, now
Yes, sir.
moving on to the next point, it says investment fluctuation reserve. Tell me, what should I do with the investment fluctuation reserve? Whether it should be transferred to the realization account? Yes, it will be
Yes,
transferred to the
it can
realization
be
account.
transferred to the realization.
Yes, it will be transferred. So we'll go to the realization account, and on the credit side, obviously,
Yeah, it will be transferred.
investment fluctuation reserve. You can also write down IFR in short, 4,000. All right, everyone. Okay, is it clear to all of you? Yes or no?
Yes, sir.
Now, the next thing is that their capital balances are also given. Ashish and Kanak's capital balances are given. This is not relevant for realization account. Capital balance of the partner will be transferred to the partner's capital account. We are done with the balance sheet. Asset side, liability side, both are dealt with. Now we'll move to the adjustment. Now see, in the adjustment section, the first thing that is given, it says Ashish agreed to take over the furniture at 38,000 and pay off Mrs. Ashish's loan. Mrs. Ashish's loan will be paid off by Ashish, as well as furniture is being taken over by the Ashish as well. So what we'll do, we'll go to the realization account. On the credit side, we'll write down the name of Ashish by Ashish. Ashish is taking over the furniture, first of all, by Ashish. Ashish capital account. What are the things he's taking over? He has taken over the furniture. Furniture is being taken over by Ashish, and Mrs. Ashish's loan is also being taken over by Ashish. Mrs. Ashish loan. All right. Oh, just a minute. Since Mrs. Ashish's loan is a liability, na, so we will be writing it on here by to Ashish capital account. We'll write down Mrs. Ashish loan. What was the amount of loan? 9,000 was the amount of loan. No? So he will take over the liability of rupees 9,000. and he will take over the asset that was furniture at rupees 38,000. So 38,000 will be written here. 38,000. Got it? Is this point clear? Since he's taking over the liability, we will write that on the credit side, on the debit side. And if whenever he will take over the asset, such item, such transaction will be recorded on the credit side. So he have taken over the assets costing furniture costing 40,000 at rupees 38,000 only. All right. I hope this point is clear, everybody. Please confirm if it is clear or not.
Yes, sir.
So it's clear.
It's clear. Now moving on to the next point. It says debtor realized 18,500 and plant realized 10%. So since debtor and plant both are asset and asset is being realized, what we will do, we'll go to the realization account and write it as by cash. By cash account. Debtor is being realized as 18,500. So I'll write down debtors. 18,500. Apart from debtors, plant is also being realized at 10% more. Currently, value of plant is 2,10,000, and 10% of 2,10,000 is how much? 21,000. So it is being realized at, basically it is being realized at 2,31,000. Right? 2,31,000 is the realizable value of the plant. 2,10,000 was the value of the plant. It realized at 10% more. That means 21,000. Adding 21,000 and 2,10,000 will be 2,31,000. Is this point clear, everyone?
Yes, sir, it's
Is this
clear.
point clear? It's clear. Coming back to the question again. Point C, it says Kanak took over 40% of the stock at 20% less than the book value. Now see, Kanak is taking over the stock. 40% of the stock is being taken over by Kanak at 20% less than the book value. So let me show you how this will be presented. First of all, since Kanak is taking over the assets, we'll write down by Kanak on the credit side of the realization account, write it as by Kanak. He have taken over the he is taking over the stock. Now see, stock currently is book value of the stock is 24,000, right? 24,000 is the book value of the stock. He is taking over 40% of such stock. 24,000. 40% is taken over by Kanak. How much is 40% of 24,000? 24,000 into 40%. 40% of 24,000 is 9,600. All right. And question says that it is being taken over by Kanav at 20% less than the book value. So reduce 20% of this as well. 20%, reduce 20% more. Less 20%. So 9,600 into 20% will be 1,920. 9,600 into 9,600 minus 1,920 means 7,680. That means Kanav have taken over the stock at 7,640. 7680. Got it, everyone? Is this point clear? See, what I'm saying is that the stock price, the value, the book value of a stock is 24,000. Out of 24,000, Kanav have decided to take over 40%, but he will be taking over such stock at 20% less than the book value. So this is the book value of the 40% stock that he's taking over, but he's taking over the stock at 20% less than the book value. That means we will reduce 20% out of it, and this is the final value at which Kanav is taking over the 40% stock. 7680. 7680. Got it, everybody? Is this clear? Is this point clear to all of you? Yes or no? Do I need to explain this point again? Guys, please tell me.
It's clear,
If
sir.
anybody, it is clear. Anyone else? Anybody want me to explain this point one more time? No. Okay then. So now question also tells you about the remaining 60% stock. It says that, see, read the third adjustment. It says that remaining stock was sold at a gain of 10%. How much is remaining, guys? If 40% is taken over by, Kanav, then how much is still remaining? Tell me. How much is still there? 60%?
60%.
And it is being sold in the market, right? 60% will be how much? If 40% is 9,600, 24,000 minus 9,600, then the remaining 60% stock will be 14,400. Is that correct? Remaining stock is 14,400. Now this is being sold at a 10% profit. 10%, just add 10% in it. You will be able to determine the realizable value of the remaining 60% stock. So 14,400 into 10%, that means 1440. That means realizable value of the 60% stock is 15,840. Now we will transfer this value here. We realize this by selling it in the market. Stock. We realize cash, na? How much is the cash? We realize by selling of the stock. We realize 15,840. Got it, everyone? Is this point clear? Yes or no? Please confirm.
Yes, sir. Clear.
Clear. So this is this. You can show it as the working note. Just a minute. This was the working note. Anyways, moving back to the realization account, let's read the next adjustment. Adjustment D. It says trade creditor took over the investment in full settlement. Now see, one of the trade creditor is at what is the value of the trade creditor? Trade creditor is 42,000. Now trade creditor is saying that they will be adjusting their creditors, they will be adjusting their amount in full settlement against the or in return of the investment. So instead of getting the cash of 42,000, they are okay if they are provided with the investment of 32,000. All right. So this is called adjustment of the creditor, adjustment of the liability with the asset. If any liability is being adjusted with the asset, such adjustment cannot be recorded in the realization account. You're getting my point? Any adjustment between the creditor or the any adjustment between the asset and liability won't be recorded in the realization account. This is what item D, adjustment D, is all about adjustment. We are adjusting the liability with the asset. If one of the liability is being adjusted with the asset, Such kind of adjustment of asset and liability cannot be recorded in the realization account. I hope this point is clear to everyone. In adjustment D, item D or point D, it talks about the adjustment of one of the liability with the value of the asset. Such adjustment, inter-adjustment of the liability and asset with each other won't be reflected in the realization account. Got it, everybody? Is this clear to all of you? Yes or no?
Yes, sir.
Yes, sir.
Okay, so we won't be doing anything about the item D, adjustment D. All right, now let's move to the point E. Point E says Kanav agreed to take over the responsibility of completing dissolution. Kanav have taken the responsibility of taking over the dissolution, completing the formalities of the dissolution, and firm have decided to pay him 12,000 to bear realization expense. An actual expense of realization amount to 8,000. Now see, thing is that realization expense is 12,000, and it is being it will be paid by, sorry, just a minute. Uh, yeah, okay. So see, here Kanav have been given a responsibility to complete the dissolution, for which he will be paid a remuneration of 12,000. All right. The thing is that we have paid 12,000 to dissolve the firm, but he actually incurred 8,000 only. See, the actual expenses incurred on realization is not relevant. If we are giving him a remuneration of 12,000, this is only relevant for us. What is the actual realization expense? This point is not at all important. Whatever the amount that is given for the dissolution as a remuneration to the partner, that is only relevant. So this point is not at all important. Okay, just ignore this point. So we'll go to the realization account one more time. And since realization expenses need to be borne by the Kanav only, so we'll go to debit side of the realization account. As I told you that the realization expenses need to be recorded on the debit side. Realization expense will be recorded on the debit side. But the thing is that this time realization expense is not being paid in cash. In fact, all realization expenses will be borne by Kanav only. So instead of writing down the value of the cash, we will just write down to Kanav's capital account. Kanav will be Kanav is taking the responsibility of dissolving the firm. So all realization expenses will be borne by him only. Realization expense. How much? Be 12,000. Got it, everyone? Is this clear? Yes or no? Tell me if it is clear or not.
Yes, sir.
Yes, sir.
Now, see, the what are the assets being realized? Stock. We have realized some value by selling of the stock. We realize some value from the debtor. We realize we transfer the entire furniture to the Ashish plant. We have received some amount from by selling of the plant as well. Investment is already taken over by the creditor. All right. So we have recorded all realizable value of the asset on the credit side. Now listen to me very carefully. If any asset if any asset have any realizable value, only then such realizable value will be recorded on the realization account. But if on the other hand, if we talk about the liability, if any liability is being paid by one of the partner, or if it is given in the question that any liability is being paid off, we will pay off such liability through bank or cash. But if question is silent about whether the liability is being paid off or not, we will simply presume that liability must be paid off. Liability will always be paid off. it cannot be possible that we don't, at the time of dissolution of the partner, we do not pay the liabilities. So now see, pay attention, try to understand. So what happened to the trade creditor? Trade creditor already adjusted with the investment. That means we already paid off trade creditor by giving him investment. So we already done the treatment of this. Sir, what about Mrs. Ashi's loan? Ashi's loan is also taken over by Ashi. Mrs. Ashi's loan is already taken over by Ashi. So this liability is also adjusted. What about investment fluctuation reserve? Since the entire amount of entire amount of investment is taken over by the creditor, so that means investment fluctuation reserve is also adjusted. Investment fluctuation reserve is also adjusted. Now only one item is remaining. That is employees provident fund. What do we do about employees provident fund? We will presume that it is being paid in cash. So for this, we will have to enter it on the debit side, and we'll have to write down it as to cash account. We need to pay off the liability. If any liability is not yet adjusted, so after recording all the adjustment, after doing all the adjustment, we will look for the liability which is not yet paid, and we will pay off such liability. So like in this case, trade creditor is adjusted with the investment. Mrs. Ashi's loan has been taken over by the Ashish himself. Investment fluctuation reserve is also adjusted with the investment, right? But employees provident fund is a liability which is not yet adjusted. So that means we will have to pay off the employees provident fund. So employees provident fund will be paid in cash. Employees provident fund will be paid in cash. Amount is 60,000. Right, everyone. So I think we have recorded all the items here. Now all we need to do, we will just total it. Just total it. This. It will be, first of all, let's just total the value of the sundry asset, 24,000 plus 19,000 plus 40,000 plus 2,10,000 plus 32,000 plus 3,25,000. And totaling the liabilities, we will have 42,000 plus 60,000 plus 9,000 plus 4,000. This will be 1,15,000. Right. And the furniture is only 38,000. Ashish's account only have 38,000. Cash. By cash will total all these value. 18,500 plus 2,31,000 plus 15,840. This will be 265,340. And Kanav's account, Kanav have to figure over the stock only to 7680. On the debit side of the realization account, we had Kanav's capital account. Realization expense had to be borne by Kanav, and employees provident fund will be paid in cash. So I think we have recorded every transaction here in the realization account. I hope this is clear to all of you. All we need to do is now we will just total the credit side first, and then we will subtract all the items of the debit side of the realization account. By totaling this, we will be getting, just a minute. You will get 4,26,020. 4,26,000. This is the credit side total. And now we will subtract debit side item. 4,26,020, subtracting 325, subtracting 12,000 and 60,000. then we will have a remaining balance of 20,020 rupees. This will be considered as the profit. And we will transfer same to the partners. Who were the partners? And Ashish and Kanav were the partners. Ashish account and Kanav. 20,020. This will be transferred to Ashish and Kanav in their profit sharing ratio. And their profit sharing ratio was 3:2. So when you will transfer their profit to their account, it will be 12012. All right. And for Kanav, it will be 8008. Totaling this, we should get 20,020. And when you will total the debit side now, you should get the same answer, 4,26,020. All right, everyone, is this clear? Yes or no? Please confirm if it is clear to all of you or not. This is the second
Yes.
question of the realization account.
Yes,
I
sir.
hope everything is clear. All of you?
Yes,
Apart
sir.
from Alexander, Abin, Ayan, Pranav, Tanya. Is everything clear till this point? Tanya, Mariam. Tanya, is it clear to you?
Yes, sir.
All right. Great. Anybody still writing? Do I need to scroll any specific section of the solution? Just tell me. Also tell me if everybody done writing this. Done, everyone?
Yes.
Sir.
Done. Okay. All right. So moving on to the next question. We skipped question number 2. So let's now go back to question number 2. This is question number 2. It says Pradeep and Rajesh were partners in a firm, sharing profit and loss in the ratio of 3:2. They decided to dissolve their partnership on 31st of March 2018. Pradeep was deputed to realize the asset and pay of the liability. Okay, so one of the partners have taken the responsibility to dissolve the firm. He was paid 1,000 as commission for his services. So this is a kind of remuneration that he's whatever he's doing, he will be paid a remuneration of rupees 1,000. The financial position of the firm on 31st of March 2018 is given as we have the balance sheet given for the firm. On the asset side, as you can see, we have a building, investment, debtor, provision. See, provision, even though it is written on the asset side, provision for debtor is considered as a liability. This is, keep that in mind. Provision for debtor is considered as a liability. So whenever you will be transferring the liability to the realization account, right? We need, in order to prepare the realization account, we need to transfer the liabilities to the realization account. Huh? Make sure whenever you will be transferring the liabilities to the realization account, you should also write down provision for doubtful debt. Among with all other liabilities, you need to record this as well on the credit side of the realization account, considering it as one of the liability of the firm. Apart from debtor and provision, we have bills receivable, bank balance, P&L account, debit balance, and then goodwill. Okay. Then on the liability side, we have creditor, Mrs. Pradeep's loan, account, Rajesh loan, investment fluctuation fund, Pradeep, Rajesh capital balances. It says Pradeep agreed to pay off his wife's loan. Half of the debtor realized 12,000. Remaining debtor were used to pay off 25% of the creditor. So that means half of the debtor debtors realized 12,000. And remaining half is being adjusted with the creditor. Remaining debtor were used to pay off 25% of the creditor. What is the total value of the creditor? Total value of the creditor is 80,000. And what will be the 25% of the 80,000? 25% of 80,000 is 20,000. So we have adjusted 25% of the creditors with the half of the debtor. And since it is the adjustment of the asset with the liability, therefore this transaction, this particular event won't be recorded in the realization account. Everybody understand this point? Since we are adjusting the debtors with the creditors, so this particular transaction, this particular event won't be recorded in the realization account because it is the adjustment of the asset with the liability. Got it? If it is clear, please confirm. Everyone?
Yes, sir. Yes, sir, it's clear.
Yes. Moving on to adjustment C, it says investment sold to Rajesh. So Rajesh is basically taking Rajesh have taken over the investment at rupees 27,000. Building realized, that means we have sold the building in the market at rupees 1,52,000. Remaining creditors, because 25% of the creditor was set off with the debtors, na? So remaining 75% of the creditor were to be paid after 2 months. They were paid immediately at 10%. So creditor which were to be paid after 2 months, they are being paid immediately, and because we are paying creditor immediately, and because of that, creditors have allowed a discount to us at 10% per annum. All right, those creditor which were to be paid after 2 months, they are paying such creditor immediately, and because we are paying them immediately, they have allowed us a discount of 10% per annum. Next, adjustment sales bills receivable was settled at a loss of 1,400. We have basically realized the value of bills receivable at a loss of 1,400. Then realization expense amount to 2,500. Realization expense is 2,500. All right, we need to prepare realization account in this question. All right, everyone. I hope the question is clear to all of you. Tell me if it is clear, yes or no. If any point is bothering you, please confirm. Please let me know so that I can clear that particular point. Anybody have any problem understanding question, any item in the question, any particular adjustment in the question?
It's clear, sir.
It's clear.
Yes, sir, it's
All right,
clear.
so no one else is saying anything, so I'm presuming that nobody's having any problem. Guys, I'm giving you this question as a homework. We will discuss this question in the next class. If you are not able to solve this question, we will discuss this question in the next class. But as of now, we are not going to discuss this question now because we don't have enough time available to discuss this question. So we will cover this question in the next session. But because this question is pretty much similar to the previous question that we just did, it is pretty much similar to the question number 3. So I'm expecting that you will be able to solve this question on your own as well. Therefore, I'm giving this question as a homework, and we'll discuss if you are not able to solve and you are not able to get the right answer. I'll be covering this question with you in the next class. All right, everyone, is it clear? Tell me if it is clear or not.
Yes, sir.
Okay, and also just write down the answer of this question. Write down the answer. In the realization account, we will have a profit of 30,500. If you'll get this profit, that means you have done the question correctly. Answer of this question is 30,500. Profit is 30,500. We will have a profit in the realization account, and profit will be 30,500. And credit side balance and debit side balance will let me also tell you that debit and credit side balancing figure will be just a minute, let me check. It will be 3,59,000. 3,59,000. So while solving this question, make sure that you get these value. If you're not getting this value, that means you are making some mistakes somewhere. All right. So this is it, guys. This is the answer of the question that I gave you for homework. We will discuss this question in the next class if you're not able to solve this. But for today's session, this is it. We'll discuss few more questions based on the resolution in the next class. Anybody have anyone want to ask anything? Anyone have any kind of question? Eben, Tanya, Alexandra, Ayan, Pranav. All right. So since nobody's having any problem, no one is asking any doubt. So this is it for today's class, guys. Thank
Sir,
you so much for joining. We'll see you in the next session. Goodbye. Take care. Alexander, you will wait only.
Thank you, sir.
All right. Bye. Alexander, you need the extra class, huh?
yes, sir. Sir, I could you show the question also? I didn't screenshot it. You're done, sir.
Done. Okay. So
Yes, sir.
just a minute. Alexander will take a 2-minute break and then we'll continue.
Okay, sir.
नोटिफिकेशन आया ना मूवमेंट डिटेक्ट
Okay, Alexander. So in the last class, we did till guarantee. We have completed interest calculation of interest on capital or the formation of yeah we have completed interest on capital. We need to start with the guarantee of profit to partners, right?
Yes, sir.
Okay. So this is a easy topic. However, it is a little lengthy. So let's start with first of all the meaning of guarantee. I'm sure you already know this that guarantee is basically uh, it is assurance given by the firm or one of the partner to the other partner that irrespective of the situation, we will be giving you a certain amount of profit. So guarantee is basically an assurance given by one person to the one partner to the other regarding the uh, uh, a certain minimum fixed amount as a profit. All right, and there are guarantee could be of two types. Guarantee may be given by the firm. That means when all the partners have collectively decided to give the guarantee to some other partner, that is considered as the guarantee given by the firm. Let's suppose if there are three partners, let's suppose if there are three partners X, Y, and Z, and if let's suppose they are admitting one new partner, Mr. A, and they collectively giving him guarantee that he will be able to maintain a sufficient profit of 20,000. That he will be able to maintain a profit of 20,000. So this is considered as the guarantee given by a firm, since all the partners are giving him the guarantee. That it might be possible that one person, let's suppose in this case, X, Y, and Z, there are three partners, and only Y is giving back guarantee to partner Z. So this is considered as the case of guarantee given by the partner, one given by the one partner to the other partner. Now there may also be a situation that sometime a partner give guarantee to the firm. Let's suppose one of the partner, Mr. Z, is giving guarantee to the firm that once he becomes the partner in the firm, he will be contributing sufficient amount of revenue. Let's suppose he will be generating a revenue of 50,000 for the firm. Once he will become the partner in this firm, he will be generating 50,000 of revenue. This is considered as the guarantee given by the partner to the firm. So guarantee are of two types. Guarantee given by the firm to the partner or partner by the firm, partner to the firm. All right, so let's discuss this question number 36. It will make things more clear to you. It says A and B are partners sharing profit in the ratio of 3:2. C was admitted for the 1/6 share of profit with a minimum guaranteed amount of rupees 10,000. That means C, since in this question it is not uh, specifically given that who is giving such guarantee to the new partner. It says that he is being admitted for 1/6 share of profit, and he has been given a guarantee of rupees 10,000 minimum as the minimum profit. So who is giving this profit? Since question is silent about who is giving such guarantee to the new partner, it will be treated as both the existing partners are giving such guarantee. So this will be considered as the guarantee given by the firm to the new partner. At the close of the first financial year, firm have managed to earn 54,000. All right, find out the share of profit which A, B, and C will be getting. Now see, this is very easy. First of all, since 54,000 is the total amount of profit that firm have managed to generate. Out of this 54,000, first of all, we will give it to C. 1/6 will be transferred to C, right? And 1/6 of 54,000 is how much? 9,000, right? And after paying off 9,000 to C as 1/6 share in the profit, how much will be the remaining profit? How much remaining profit will be left? 45,000, I guess, right? This 45,000 will be shared between A and B collectively. In what ratio? In their profit sharing ratio. In their profit sharing ratio is how much? 3/5 and 2/5. 3:2 na? This is the profit sharing ratio. So 45,000 into 3/5 means 27,000 and 18,000. Right, Alexander? This is how we will distribute this profit. Yes or no?
Yes, sir.
Now see, now the problem is that how much C was actually guaranteed. How much profit C was actually guaranteed? C was guaranteed 10,000. But since firm have only managed to generate 54,000 and calculating 1/6 share in this profit, C only got 9,000. So that means there is a deficiency in the profit of C. Is that right?